Hey, what's up, guys? This is Sam, and today we're going to be covering how to position size your trades. So, I think this is a really important topic to cover. Trading is all about probabilities, and it's all about risk reward and putting the right probabilities in your favor. So, one thing that you can relate it to is kind of like blackjack, right? If you're sitting down at a blackjack table, of course, you can just bet the same amount on every hand, but we know that's not the optimal strategy, right? What is the optimal strategy for blackjack? Well, the optimal strategy for blackjack is if you're able to get a good card count, meaning that you have a general idea as to how many, high cards versus low cards are left in the deck, then you should bet more when there's more high cards in the deck because that tends to be good for you, and you should bet less when there's low cards left in the deck because that's usually good for the house. So I like to view trading the same way. I am not someone that likes to size every one of my positions, 1%, 2%, 5%, whatever the percent is. I think that rating your setup is the first thing that you should be doing. And then from there, understanding the rating impacts how much you allocate to the trade. So, for example, the better the setup, the higher the allocation, right? So before we dive in here, I'm going to show you one example that comes to mind of a trade that John had here in Google. It was right around this time here, and I'm going to show you why it was such a good setup and why he went so big on it. On this trade, if I remember correctly, he went like 20 to 25% of his account, which is massive size for any account, right? You always want to think in terms of percent, not dollars. That's what matters is percent, not dollars. And 20% is big. So I kind of want to cover why he went so big. But before we do, let's do this. Actually, you know what? Let's actually start here with the trade itself, and then I'm going to kind of show you a couple of tips and tricks in terms of rating your setup. One thing that I do want to cover before we dive in, though, is understand what is your base amount. Right? What is the base amount in percentage terms that you're willing to take a trade? What does that mean? Let's say you have I'm going to use a larger number. Let's say you have a $100,000 account, right? You have to ask yourself, is my normal trade sizing 1%? Which on a $100,000 account would be $1,000. Is it 3% or $3,000 or is it 5% or is it 10%? Really, only you can decide that, right? So before we dive into any of this, so that you have somewhere to start modulating your bet sizing, ask yourself, what is your standard sizing for a standard issue trade? And that's only something you can answer. For me, it would be somewhere around 5% for a normal standard trade, and then I size up or down depending on the quality of the setup. So I do want to show you this example here from back in March, and it's just the one that came to mind because I remember John saw this setup, he called it out in the room, he added, it went lower, he added more, it went lower, he added more, and by the time it was all said and done, he had like a 20% allocation to this position. So you'll notice here I have Google on the right, which was where he was trading, and then I have the QQQ on the left. Right? And this is one key thing in terms of rating your trade is this is going to be one component that we're going to cover here in just a second, and it is making sure that the stock that you're in works well with the index. And when you have that dynamic of index and stock, it really can be very powerful stuff, and it usually does merit a higher allocation than if you didn't have this setup. So what's the setup? Well, John started getting long Amazon all through here. Or excuse me, not Amazon, Google. All through here. Right? And if I remember correctly, his entrance wasn't all that fantastic. Right? But he stayed with the setup and he knew what he was looking at. And he's like, as long as it holds this little blue line down there, I'm just going to keep on adding. And I'm going to trust that the squeeze, which is right here, in the context of the trend that brought you into the squeeze, which is clearly an uptrend, will continue to fire in the direction of the trend. So this is just the setup on Google. On its own, it's a fine setup. There's nothing wrong with it. But look why it's more powerful here when you combine it with the QQQ. So this is the exact same time in the QQQ that you started getting an upward bias to your squeeze, right? So you can see here how the index and the stock, and in this case, notice how Google looks better than the Qs. So John already did a good job of choosing a strong horse for this race, because you don't want to buy something that looks worse than the index, and he did not. Google looks much better. You see how this moment in time, they both have squeezes, they're both in uptrends, and then it was really just a matter of time before they both squoze out of their squeeze. So this is this shows a lot of different things here in terms of the quality of the setup. This would be one of the higher quality setups because of the dynamics around the index and the stock. So let's try to quantify some of this. So rating your trade setup. Number one, stacked moving averages. Right? Hopefully you all know what that means. You want to see moving averages that basically look like this. You see how they all have kind of creating like a wave structure on the way up, and they're all aligned and have a defined upward angle to them. So that's what stacked moving averages is. And that just tells you whether you're bull or bear. Next up, do you have a squeeze? You should always ask that. After that is the index and sector confirming. Meaning, does the index, which is the QQQ, or you can get even more granular and go to the XLC, which is the sector that contains Google, are these two things confirming with what you see on Google itself? In this case, they definitely are. Are you near a buy point? Think 21 EMA or 50 SMA. Right? And in this case, again, in terms of getting a good entry and a solid setup, John was buying all through here, which is right near the 21, and then a little more at the 50. And I would use basically these 4 points. I could give you a lot more than this, but I don't want to start kind of muddying the water unnecessarily. So I think if you just focus on these 4 and then start to add some of your own, this will help you tremendously. I would imagine most traders aren't doing this. So if you can just understand the setup, number one, and then how to rate the setup so that your bet allocation is proper for an A+ setup versus a B- setup, right? This will help you out no matter what, right? So what you'll end up doing after this is, one, you'll start allocating more capital to the better setups, but then two, you'll start to also ask yourself, why am I ever trading anything that's not an A+? Right? If these 4 points are critical to having an A+ setup, why would you ever not trade that, right? So then it just tightens up your game, it tightens up what you're looking for in terms of an entry, and overall it just makes you a better trader. So this is one of the most important things in this video series that we've covered. In this situation, I would call this kind of an A+ setup. And of course, you can play around with that on your own. It's more art than it is science in this instance. And for A+ setups, you allocate more. So for example, I said my allocation is typically 5% for just a common setup. In this instance, it might be 10%, right? Now, I'm not John. I typically won't do 20%. That's a bit... I like to sleep at night, but 10% doubling the allocation for an A+ makes sense to me. If it's a B setup, right, maybe it has 3 of these points, but not all 4, then you just go with a common allocation, whatever it normally is 5%. And then if it's anything lower than a B, then you can just do something between 1 to 3%. What you'll end up finding, though, is that if you're doing a lot of B setups, it kind of will feel like a waste of your time. Once you understand this dynamic of being able to grade the setups, you'll really only want to do A+ setups. And if you don't see any, guess what? Nothing to do. You wait for the next setup. So hopefully this was helpful, guys. This is an important topic to cover. This is something that we cover all the time at simplertrading.com in the Gold Room. So if you'd like to learn more, or basically just like to see how we do it in a live, real money setting, come and check us out sometime. simplertrading.com. Alright guys, hope this video was helpful, and we'll see you for the next one. Cheers. Hey guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video, and before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.